Hey everyone, thanks for joining us. Brandon Rogers and Trent Bradshaw with Bradshaw Financial Planning and Mind Your Money. Got a market update. Today is March 14th, 2023. A couple things that we'll highlight here, some uncertainties in the market on the banking side of the equation that we'll talk about. We'll talk about inflation, we'll talk about interest rates, and then some changes in the portfolio. All right, well, thanks for, again, joining us. Again, got a lot of things going on in the market. And most recently, let's talk about the bank situation. What happened kind of over the weekend, Trent?
Well, it's a good point. I mean, the Fed's got enough on their plate, right?
A little bit.
And now you've got the 16th largest bank in the country that actually went under. The FDIC had to step in and take over that bank. The biggest concern associated with that bank was the majority of the deposit holders had way more than the $250,000 that the FDIC was going to back. So, as we expected, we felt like the government would step in and protect the depositors, which they're going to do. But the shareholders are going to be left just left out.
Yeah.
If you own shares in that particular bank, obviously it's going to be worth nothing moving forward. So at least the depositors were protected from that standpoint. But from a volatility standpoint, this increases the uncertainty of what's going across the board in regards to the banking industry and also the market in general. So could this happen with other regional banks, other smaller banks from that standpoint? The question is it actually going to become a contagion like we've seen in the past? Is this a 2008 scenario? Well, based on what we're looking at, we don't think it is, but it sure lined up to kind of mimic what it looked like back in those days, right? Mm-hmm. So the Fed did a good job. They stepped in. The FDIC stepped in. Government stepped in, made sure the depositors were protected. Some of that volatility has come back out of the market as of this morning. Market's rallying. Got some good inflation news this morning. Inflation news year over year. Inflation's down to 6%, coming down from 6.4 in the month prior. That's down from a peak of 9.1% back in July. So the Fed's doing their job about getting inflation to come down. The question is, how long is it going to take to get back into that target range of 2 to 3%? We could be looking well into 2024 before that happens. But all that being said, talk a little bit about what expectations are for those interest rates, what the Fed's going to do, and how it might affect our portfolios.
Yeah, so as Trent mentioned, I mean, inflation's been here. Everybody feels it everywhere you go. Like you said, it has been coming down off its peak, so that's a positive thing. It is working, but it takes time, right? So might not see it in the grocery stores or whatnot as quick, but again, it is coming down, so that's a positive. When we look at the Fed and what they're doing, we had 7 rate increases last year. We had one already this year, and then we have another Fed meeting coming up here at the end of March 22nd or so, and then also the next one, say 1st of May. Expectations right now are still going to be they're going to continue to raise rates, right? So maybe another quarter point at each meeting. We'll wait and see.
But to add on to that, after the bank collapse on Friday, the probability of a rate increase came down a lot.
Right.
So it looked like the Fed wasn't going to increase rates.
Yeah.
But after the discussion, government backing of the depositors, those rate expectations went right back to where we expected it, right?
And I mean, again, I think, I'll keep saying this too, is the Fed's always been pretty straightforward about what they're wanting to do. So they always interpret the data when they sit down and meet, because this stuff is ever changing. So again, they will always be pretty transparent about what they're going to do and what their expectations are doing. So again, we'll keep you posted on that, and we'll constantly follow that, because that's what's really running this market. Portfolio-wise, again, we're still going to keep the defense in place. Have made some changes recently to keep that defense there. Potentially add some more to it until we get these rate hikes kind of settled down. The Fed says hey, we're good for now. When that happens, we think that'll be a real positive for the market. But again, as always, we'll keep you up to date. We'll make these changes as we see fit. But any questions whatsoever, it can be a scary, emotional time. Let us know. We'll certainly be able to talk about it. Again, thanks for joining us. Brandon Rogers, Trent Bradshaw, Bradshaw Financial Planning, and Mind Your Money. Take care.